Hello and welcome to another daily recap. So this is the 82 and it's August 20, 2024. And today, this is you. So yeah, to give an overall summary of what happened during EU, GU and XIU. EU, I got a beautiful trade and it hit the take profit. So actually, I left a lot of profits on the table and I just got 2.5 hour, but the trade went on up to 10 hour. But this is my optimum point 2.5 hour. Like after taking enormous amount of trades, if this max or gain, if this maximum or possible is more than uh, if it if my data says that I need to go for higher take profits, then I'll just go for it. But for now, I just stick with the 2.5 hour take profit. That is very fixed. And sometimes I'll do break even when there is when the price uh, based upon the market structure in the lower time frames. And it was during the New York and in EU and in GU and XIU, I didn't get any trades, and I'll show you why. But before that, let's jump into the analysis of the EU. So this is the daily chart. The daily swing structure is bullish, internal structure is also bullish, and the fractal is also bullish. So all the structures in the daily are aligned bullish. So even though there is this daily supply, I will just continue to take longs until and unless there is a strong bearish shift. I'm not going to expect any bearish order flow. I'm just going to follow the bullish order flow. That was the mindset that I was having before start of the session. So this is a 4-hour chart. 4 hour structure is bullish. Internal is also bullish. And same. Uh, there is the bearish top. So I'm not going to take any bearish trades. Sells until and unless there is a strong bearish shift in the structure. Though, yeah, I know that the price is still in the daily supply, but I'm not worried about that because the trend is tremendously bearish. So I mean tremendously bullish. So I'm just going to follow this bullish order flow until this strong low gets broken. The fractal order flow is too elongated. Yeah, and one more thing is that price can come down to mitigate this 4 hour demand and then continue the bullish order flow. So this I can play this place these shorts up to this 4 hour demand, but I must follow that with aggressive trade management because price need not come to this demand. Price can just fill this parallel gap and then push up. So I need to break even immediately after a small structure is broken. So like that, I need to incorporate uh, aggressive risk management while taking these kind of trades. So this is H1. H1 is swing structure is bullish. Internal is also bullish. So if I want to take a bearish trade, what I need to see, I need to see a sweep zone followed by chalk bearish. That's what I just marked these two liquidity points where the price can just sweep those liquidity, and then when it pushes down, a fresh PY will be formed. I can look to trade that PY. I can trade the bearish order flow. If the price takes out this buy sell liquidity and doesn't take out this low and continues to go up, then I know that the buyers are in control. Then I can look for the fresh demand and I can look to take longs from here, assuming that the bullish order flow will continue. If I take longs, I must be aware that this parabolic ad could be respected and the price can shift bullish to continue the phase A2 longs. Yeah, why I'm telling this, when when the price action shifts bullish here, we can also expect the price to come all the way down to fill this parabolic gap. And price action is bit consolidative. I am looking for the price to fit buy sell liquidity and then give a strong shift down to confirm that the supply is in control to look for phase D shorts. So this is phase A short and this is phase D short. Sorry, phase A longs, phase D shorts. So both are kind of medium probability. I can't say that phase A2 is high probability and phase D is low probability because phase A2 I'm going to trade it from not you know from not from a good area of value. If that phase A2 shorts is from this POI, I would be very happily taking it because this is an area of value. Price is in the discount of the internal range and then we can go up. But still, is not in the discount of the swing range. It is in the premium of the swing range and it is in the premium of the internal range. So it is a little bit riskier, but I just want to follow the bullish order flow. And I don't want to go shorts unless and until I see a strong shift in the order flow in either H1 or H4. So session update at 7:41. I saw that the bullish order flow has been taken out. The buy sell liquidity has been taken. Now I want to see the uh, the price to shift bearish, chalk bearish to confirm that the supply is in control. And yeah, it chalk bearish, but that chalk bearish was not, satisfying one. It just wicked it, and even the next candle, if it didn't close below the previous candle's low. Like I'm saying, if the next candle didn't come down here, come down like this, then this is not a valid chop. So also I found a SMP divergence here, a bullish SMP divergence, which means this is a liquidity run, probably because the price wants to go up. This is the US dollar index, and I just inverse the chart. So this is price made lower lows in EU, whereas higher highs in DXY. So chance that the price can go up, and yeah, it did. It shocked bearish, and then boom, it went up, and it took out the and it made internal takeoff on the upside. So this was the POI that swept liquidity and then pushed the price up. So I marked this POI, stock this, mark this as strong internal low, expecting the price to push down, respect this POI, and then go up. So it's very clear. I'm going to play the phase A2 longs. So since I'm having a strong low protected below, I was confident that this trade is going to hold. So these are the conditions for the A2. Price not reacting off from the high time frame POI. Price is reacting from high time frame POI. Why? You can see price is still in the daily supply. Price is still in the daily supply. In line with the medium time frame order flow. Yeah. MTF POI with a score of 4 by 8. Actually 1, 2, 3, 4, 5. This should be next. 1, 2. High time frame narrative supporting the medium time frame area. Yeah, because what I told you in the high time frames that I'll be looking for longs until and unless there is a strong bearish shift in the order flow. So that's what. So three boxes are ticked. It's a medium probability trade. So what is the entry method? So there are two entry methods that I can use with a clear LC2A or LC2B or with M15 confirmation entry. So these are the two entry models that I can use for this because there is no H1 lid or there is no M15 lid. So obviously I need to go with these two entry models. You can see one push up, so there is no lid in M15. That's why I just marked these two boxes. Price mitigated the H1 POI, but there is no entry models to take longs. I'll wait for the New York volatility to kick in before taking trades. And this was London lull at 10:60 MT plus one. So I took one loss yesterday during London lull in Euro USD. So I decided not to take any trades because I already took many losses during London lull. And yesterday was a reminder that I should not take any trades during London lull. So I just avoided and waited for the New York to kick in. And this was during the London lull. And anyway, there was no entry models. So price pulled back. So the only option for me to go is whether if the price makes a bullish chalk, chalk bullish in M15, then I can say that this flow is protected and I can trade from here. Otherwise, the price can continue this bearish order flow and this POI could be invalidated. And price made a bearish chalk. And if you look closely, you can see this is a POI that made a fractal boss, and this is a POI that made fractal chalk. So this is where the supply and demand meet. So this is a flip zone. I placed my order just above the flip zone, stop loss below 2.5R, and it was actually at 12:26, half an hour immediately after the New York Open, 12:30. So this was the candle that did the manipulation. So many people actually market works in just two emotions, that is fear and greed. I think maybe with this candle, the fear would have kicked in and many people would have shorted here. So there were a ton of sell side, buy side liquidity could be here, and then price would just run them off. Like, and yeah, and the price did that one, and it went so high. Uh, my take profit was so small when compared to this price action. So actually, I got the maximum R was 10 R that actually which I mentioned earlier. So it's a good trade, and I got 2.5 R, which somewhat nullifies the losses that I took yesterday. So when I So probably tomorrow I can expect that the price still continuing that bullish order flow, and obviously take that, it can flip that daily supply, or it can respect the daily supply and then start the run to external leg in the daily. So that's a story for tomorrow. For now, it's a winner day and let's celebrate that. Let's jump into GU. So okay, let's jump into GU. So as I already told you, in GU I didn't get any trades. So let's just quickly recap on what happened on GU. So this is the daily, and the daily, the swing structure is bullish, the internal is also bullish. As I already told you, this is a ton of low resistance liquidity, so I told you that the price can go up rapidly. take out this weak internal high, and its price is still going up. So I'm expecting this bullish order flow to continue till the price takes out this weak internal high. So jumping into the this is zoomed in version. So this is a valid supply. So I can expect the price to give some reaction of the supply, tap into this demand, and then it can push up. That is one kind of expectation. So if that gives a reaction, then a couple of days, maybe a couple of weeks would be bearish. But for now, what I'm expecting is I just make my analysis very simple that I'm going to take only longs. Uh, what happens if the price goes down? That's why we are having 4 hour. If I see the 4 hour stock bearish, then I would be alerted and I'll look to trade shorts until and unless the passive sector of the 4 hour shift bullish. This is the 4 hour swing structure. Swing structure is bullish, internal structure is bullish, and this is strong internal low, weak internal high is not yet formed. Prices is strongly bullish, and it is expected to continue that the price can take out. It is expected that this strong internal structure to continue and take out this 4 hour weak swing high. So zooming in, this is the strong internal low. This is the strong internal low, and weak internal high is not yet formed. So when I was trading, 6 months back, what I would expect is I would expect an ideal market condition. An ideal market condition would be price going up, coming down, going up, coming down, going up. It's like a picture perfect. But later I realized that sometimes when the momentum is very strong, it is not necessary for the price to give that big pullbacks. It can just pull back to the recent demand, use those buy orders, and then push the price up. So it's possible. So that's what I also marked this POI. So it just flipped the previous candle's liquidity. So it's a very good POI. So I just mark this POI, expecting the price to come, tap into this POI, and then go up to take out this weak swing. So, but I'm also aware that in my back of my mind, the warning still there that the price could make a deeper pullback. I'm not saying price will not make a deeper pullback during a bullish momentum. Price can make a deeper pullback. That yeah, I must bear in mind that this is a low resistance liquidity, and the price can make a deeper pullback to liquidate some of these low resistance liquidity before pushing up. So obviously, yeah, once it liquidates all this low resistance liquidity, it will tap into this daily demand and then it can push up. So anyway, that's the story for tomorrow. But for the bearish trades, I must see a 4 hour chalk bearish. Until and unless it chalks bearish, I'm gonna follow the bullish trend. So I'll just keep it very simple because here is the target. The drawn liquidity is very much nearby. So I just don't want to, you know, waste my time expecting the price to go bearish to make a deeper pullback. So this is 1 hour. The swing structure is bullish. Internal is still bullish. It has not yet made a bearish structure. So once the internal structure shifts bearish, so that is when I mark the swing high. Until and unless it is still phase A2 and price has reached the 4 hour supply. So what I can expect is price took all the buy side liquidity here. Price tapped into the 4 hour time frame. I mean 4 hour supply. So if I get a bearish stop, I can look to play the internal pullback or the phase D shorts. If the price comes down, takes this liquidity and chalk bullish, then I could look to play the phase A2 longs. It's very simple. And yeah, PSD shorts are very risky because I already told you that I'm trading with the bullish order flow, and with this strong internal low, price can hold this 4 hour POI and then it can push up. So if I take shorts from this small bearish stock, I mean small bearish medium time frame order flow, then I must have highly aggressive risk management so that anytime that the price can finish pulling back and it can start the run phase, right? So I must have an aggressive risk management system so that I can immediately break even my trades if the trade is going to go against me. And price made bullish high boss. So it was all set that when the price comes, this strong low it was all set that this strong low is going to hold. Though it does not have any liquidity, it has a buy sell side liquidity below equal. This is a sell side liquidity below, so there was no lead here, and also there is this equal lows and there is an unmitigated POI. So there is all the reason in the world that this POI could fail, but I'm just going to follow this order flow, and I'm happy to take a loss because if this structure fails, then I would know that okay, the price will now go bearish and I can look for phase C shots. Until then, I'm just gonna follow this bullish order flow. So entry method is okay, what is this? It is phase A2. price not reacting off from, so this is not valid. In line with the medium time frame order flow, yeah, it is in line with the medium time frame order flow. And medium time frame POI, it is 4 of 4 by 8. It has all the above scores. It has swept liquidity. Yes, it has swept the agent low. It has displacement. Yeah, of course it does. Order shift, made a shift in the order flow. It has made an internal shift in the order flow. It is unmitigated. It is formed during the kill zone and it is tapped within the 4 hour demand zone. So it did not flip supply, but 7 out of 8 are satisfied. So one box, two box, and medium time frame, the higher time frame is saying that the price will continue going up until the daily buy sell liquidity has been taken out. So higher time frame is supporting the medium time frame area, and we are having a high quality POI. And I'm trading in line with the medium time frame order flow. So all the confluences are coming together, and what can be the entry model? you know, uh, if this is a you have to pin demand, so below this demand could be some sell side liquidities which the price can liquidate and then it can push up. So this is the M15, and you can see that this is the M15 lid. No need to wait for LC to A because we are having the M15 lid. So once the price liquidates that lid, and we can take longs. So in M15, if you see this consolidation does not look like actual POI, but in H1 it does look like a POI. But yeah, there is always a risk that price could go against me. But anyway, what were the risk factors that I was mentioning? Like, uh, equal was below, no liquidity, no lid in the H1 for this POI, and there is another 4 hour POI and a H1 POI stacked together just below this POI. So this POI could be an inducement zone. And what else? Yeah, and in M15, this POI does not seem to be actual POI. Rather, it was just a consolidating range and then a sudden expansion. So these are the criteria that go against my POI, but still, I just trust my edge and I just place the order. At 10:04, the London got over. There was no trades, so I waited for the New York to kick in to take this sensor liquidity tap into this POI, and then I can take the longs. At the New York started, sorry, the New York didn't start, but half an hour before New York, price made an LC to it. So this was the start of the pullback. Price came down, traffic pullback, price pushed down. This was a high that was taken by just one pipet. So if you keep your pointer here, you can see the highs here. So this was I think 318 and this was 319. So it just took it by just one pipet, but that's all. But that is enough for me to say that that was a fake break. Because I'm just trading. I don't have the range. Like if right and the fake break costs me like this much, then only it is a valid fake break. I don't have those kind of intuitive systems running. So if I see that model, just execute it robotically. So this is the pullback inducement. This is the leg inducement. So lower time frames is giving perfect signal to go longs, and but the POI is not giving me the signals, but higher time frames as well as the lower time frames are suggesting me to go longs from this POI. So what I can expect, price to all I just wanted the aggressive entry is price taking out this pullback inducement, taking longs. A bit conservative approach is price taking out this leg inducement and then both pullback inducement as well as leg inducement and then taking longs. So yeah, there is the aggressive approach and here is the conservative approach. And this is the thing. Price came down, didn't take any of them. Yeah, that's a sad story. And price went in my direction without taking any of them. Price didn't take the pullback inducement nor the leg inducement. It just pushed up and it took out the daily buy side liquidity. It is a very good trade actually, but my lower time frame liquidity criteria didn't meet, so I didn't take the trades. This is how it ended up. So actually, it took out the daily buy side liquidity as expected. So it was a very good trade, but entry models sometimes don't play out, and you miss a beautiful opportunity. So it is what it is. See you. Let's jump into XAU and see how the market did yesterday for me in XAU. So let's start the AU analysis. So as I already told you in XAU, I didn't get any trades today because you will know in just a few minutes. And one more thing I forgot to tell you in this whole video is that there was no news yesterday. The news, there was no report news and it was very clear. So there was a smooth flow of the price action. That's why I was able to basket 2.5 out today. So jumping into gold, the swing structure of the daily is bullish and there is no internal structure formed, but you can see that the fractal order flow is still bullish, and we can expect that this fractal order flow can continue and price can continue the phase A2. But there is one concern is that I can expect the price to come down to mitigate this daily demand and then it can push up. But since there is no high time frame supplies from the left and this is a all time high of the gold price, so I can't play the phase D shorts, you know, because of that criteria. And also, I need a strong internal, bearish internal eyeballs to suggest me that there is, a deeper daily internal pullback can start. Jumping to 4 hour, see, same. The 4 hour, the swing structure is bullish. The internal structure is also bullish. Strong internal low, weak internal high is not yet found because once the price took that internal high, it started to consolidate. Now I need to see a deeper internal pullback to mark this as a weak internal high. So this is the liquidity that I marked today because this is a fair value gap and price can come down to fill this imbalance and obviously tap into this daily demand and then it can push up. So today could be a bearish day. I can't say, but it can be a bearish day today. And yeah, in H1, so this is the H1 is swing structure is bullish, internal is also bullish, and this is the strong internal low, weak internal high. Price already mitigated this H1 H1 demand, and it has pushed up. So what I can expect is price tap into this demand, push so up. So I can just simply expect the price to go up, take out this equal highs here, and you can just push up to take out this weak internal high. It's very simple, right? You can just see the next move coming, but I didn't take the trade. I actually waited for this. The price already told you here. Price tapped into this POI, made a bullish change of character. Again, there was a bearish chalk. So I can't trade against the immediate medium time frame order flow. I need that medium time frame order flow, that to the immediate medium time frame order flow to be in my favor. So I can't trade against the medium time frame order flow and expect the medium time frame order flow to shift in my direction. So once the medium time frame shifts direction, I can play along with that. So that is my belief. So the price actually chalked bearish. So this is a good PY. All I can do is wait for the price to mitigate this PY, chalk bullish, fresh PY, or even the you know the aggressive approach is that I can even take an risk entry immediately when the price chalk bullish. So all I want is medium time frame order flow in my favor. That's it. So at this point, I was waiting for the price to chalk bullish, and yeah, it actually chalked bullish. It didn't tap into this POI, just took the Asian lows and filled some imbalance here. And then, yeah, it actually chalked bullish and it never came back. So I expected the price to mitigate this POI to give me some entries here. And then again, there could be one more push up, or it could flip this demand, tap into this demand, and then it can go up. So there are possibilities, but I was waiting for the price to come into this demand later in New York. But yeah, it did come. It did come to this POI, but very late in the New York. It was out of my trading window. So I have no other option so to just leave the desk without any trades. This is M15, just for reference. That's it for today. And yeah, there is no trades in EU, I mean XAU and GU, but there was one trade in EU which yielded me 2.5 hours. So let's see what tomorrow has for me. Probably I would like to continue the A2 longs in all the three pairs because in all the three pairs, swing high has been taken. So probably I look to continue that bullish order flow and follow the phase A2 longs until and unless I get a strong bearish shift in the order flow. I can look to play shorts, or otherwise if there is a large internal range formed, so I can look to play the internal pullback if my medium time frame is with me. If not, no, I can't play the bearish shots, I mean the phase D shots. I can only play the phase A2 longs. So that's a different story for tomorrow. And anytime the market phase could change. So just need to adapt. Thank you guys. So see you on day 83. Cheers. Bye.